Imagine walking into your bank to withdraw your own money, maybe for a car, a family member, or just to have cash on hand. But instead of a simple transaction, the teller hesitates, asks probing questions and demands proof. Suddenly, your access to your own funds feels like an interrogation. This isn't fiction, it's happening now in places like Canada and the UK, where new arbitrary limits and rules are quietly imposed. The war on cash is real, and it's changing the very meaning of ownership and financial freedom. The implications are profound. Your money is no longer truly yours if you need permission to use it. In the UK, a man was stunned when his bank refused a routine withdrawal, citing a strict annual cash limit, £12,000 total per year. This isn't an isolated case. Across the West, banks and governments are capping cash access, removing ATMs, and demanding documentation for even modest withdrawals. The official reason? Security and crime prevention. But these measures grant unprecedented control and surveillance over ordinary people's finances. Is this really about safety or about pushing us into a system where every transaction is tracked and restricted? This is a fundamental shift in our relationship with money, one that affects us all. Limiting cash is part of a global push for a cashless society, championed by powerful organizations. In a digital-only world, every transaction is recorded, privacy vanishes, and your financial life is an open book for banks and governments. Cash is anonymous, digital money is not. With programmable central bank digital currencies on the horizon, authorities could embed rules into your money, restricting purchases, setting expiration dates, or freezing accounts with a click. The elimination of cash is the first step toward total financial control. Once cash is gone, opting out is impossible. The question isn't if, but how much control you're willing to surrender. Banks are removing ATMs and capping withdrawals, especially in rural areas, creating cash deserts. For the elderly, the unbanked, and privacy-minded, this is more than an inconvenience. It's a loss of independence. Businesses are pressured to stop accepting cash, while individuals find it harder to withdraw or spend it. This isn't consumer-driven, it's a coordinated effort to make cash obsolete. The freedom to choose how you pay is vanishing, replaced by a single, trackable digital option. The safety net of private, universal payment is being dismantled, leaving us more dependent and vulnerable. It's not just limits. Bureaucracy now blocks cash access. In Canada, even small withdrawals trigger demands for invoices or proof, turning customers into suspects. Depositing cash is just as fraught. Small business owners face scrutiny, limits, and the risk of frozen accounts. These hurdles aren't just about compliance. They're designed to make cash so inconvenient that digital becomes the only real option. The result: banks are training us to abandon cash, accelerating the shift to a fully monitored financial system. The paperwork barrier is the new front line in the war on cash. These changes in countries like Canada and the UK are not happening in isolation. They are local manifestations of a coordinated global agenda being advanced by influential international bodies. Organizations like the World Economic Forum and the International Monetary Fund have been openly advocating for the benefits of a cashless society for years. They frame it as a step towards a more efficient, inclusive, and modern global economy. They publish reports and host high-level discussions on how to overcome the so-called barriers to digital adoption, with physical cash often being cited as the primary obstacle that needs to be managed and eventually eliminated from the system. The official justification for this global push consistently revolves around combating the shadow economy and enhancing financial security. Governments work in concert through bodies like the Financial Action Task Force, which sets international standards for anti-money laundering and counterterrorism financing. When the Financial Action Task Force issues new recommendations, member countries including Canada and the UK are pressured to implement them in their national laws to avoid being grey-listed. This is precisely why Ottawa ramped up its anti-money laundering fines and introduced the $10,000 cash transaction ban in 2023. It was in direct response to scrutiny from this international body, creating a top-down cascade of policy. However, this global coordination extends beyond just fighting crime. It is fundamentally about laying the groundwork for the next evolution of money: central bank digital currencies, or CBDCs. A CBDC is a digital form of a country's fiat currency that is a direct liability of the central bank. Unlike the money in your commercial bank account, it would be programmable. This means the issuing authority could embed rules directly into the money itself. They could restrict certain purchases, set spending limits tied to your carbon footprint, or even program the money to expire if not used by a certain date, giving them unprecedented control over the economy and individual behavior. For a CBDC to be successfully implemented, it can't have any competition. Physical cash represents the ultimate competition because it is anonymous, private, and cannot be programmed or controlled remotely. Therefore, the global strategy is to first marginalize cash by making it inconvenient, then criminalize it by associating it with illegal activity, and finally eliminate it by removing the infrastructure that supports it. The new withdrawal limits, the paperwork barriers, and the removal of ATMs are all calculated steps in this much larger, long-term project. We're not just witnessing a change in banking preferences, we are living through the deliberate demolition of financial freedom to make way for a new architecture of centralized control. When you ask a bank manager or a government official why it's suddenly so hard to get your own cash, they say these measures are a crucial front in the ongoing war against serious financial crimes like money laundering, terrorism financing, and tax evasion. The logic: criminals use untraceable cash. By restricting access to cash and monitoring transactions, authorities disrupt criminal networks. This makes everyone safer. The inconvenience faced by citizens is a small price to pay for preventing organized crime. This war on crime justification provides a powerful shield for both banks and governments. But this story falls apart under scrutiny. Punishing an entire population to catch a few criminals is a disproportionate response. Critics say it's a pretext to achieve a different goal. The war on crime is an excuse to control the financial system. Beyond fighting crime, banks profit by steering you away from cash. Every digital transaction generates fees for them. Physical cash cuts them out. Cash is also a logistical constraint. Digital money is just an entry on a ledger, cheap to create and move. Limiting cash withdrawals cuts costs and boosts profits. Cash acts as a check on the banking system's power, removing your money from their direct control. Banks limit withdrawals as a self-preservation mechanism, trapping your funds. Without cash, you become an unsecured creditor. By eliminating cash, banks gain immense power and total control. While banks focus on profit, governments pursue total information awareness and control. Cash is anonymous, allowing transactions without a digital footprint. To a state seeking to monitor its population, this privacy is a bug. A cashless society creates a permanent record of every citizen's financial life, providing unprecedented insight into daily habits and beliefs. This data collection enables new forms of social engineering. The ultimate expression of this is the central bank digital currency, or CBDC, programmable money issued by the state. Governments could embed rules directly into the currency, like expiring stimulus payments or blocked purchases. A CBDC represents the final step in transforming money into an instrument of state control. Eliminating cash is a prerequisite for this future. They are herding the entire population into a digital enclosure from which there is no escape. The shift away from cash has tangible, frustrating consequences for individuals. Buying a used car, once a straightforward cash transaction, has become a logistical nightmare. Banks now often refuse large withdrawals or demand documentation, turning private transactions into matters of scrutiny. This creates delays and a sense of powerlessness. Even gifting cash to family now faces hurdles. Gig workers earning cash face suspicion when depositing their earnings. The removal of ATMs makes accessing cash inconvenient, especially for the elderly. A trip to the bank now carries apprehension. This erodes trust between customers and their banks. Banks are seen as adversaries holding your money hostage. Ordinary citizens' lives are complicated by a system viewing financial privacy with suspicion. The real-world impact is a chipping away at financial independence and peace of mind. While individuals face personal frustrations, small business owners are experiencing an operational crisis. Many legitimate businesses, from local restaurants and coffee shops to barbers, market vendors, and contractors, thrive on cash transactions. It's fast, efficient, and free from the processing fees that eat into their already thin profit margins. However, the war on cash is putting these entrepreneurs in an impossible position. Banks are now imposing strict limits not only on cash withdrawals, but also on cash deposits. A small business owner who has a successful week of sales might find themselves unable to deposit their earnings, being told they have exceeded a daily or weekly cash deposit limit they never knew existed. This creates a cascade of problems. If a business cannot deposit its cash, it faces a serious security risk, forced to hold large sums of money on site. This makes them a more attractive target for theft. Furthermore, it creates a major accounting headache. They need to pay their suppliers, their rent, and their employees, most of whom require payment through the banking system. How can they do this if the bank refuses to accept their legal tender income? They are forced into a corner, either having to turn away customers who wish to pay in cash or risk being penalized by the very financial institutions they rely on to operate. The system is actively working against the foundational principles of Main Street commerce. The pressure to go completely cashless is immense. Banks make it more expensive and difficult to manage a business account that handles physical currency, charging higher fees for cash handling and deposits. Simultaneously, they relentlessly promote their digital payment systems, which lock the business into a cycle of transaction fees. For a small cafe, a 2 to 3% fee on every single purchase can be the difference between profitability and failure. This transition is not about customer convenience. It is about transferring wealth from small businesses directly to the financial sector. The narrative of a modern, efficient economy masks a reality where local enterprises lose control and profitability. The bureaucratic hurdles are just as damaging. A contractor who receives a cash payment for a job now faces an interrogation when they try to deposit it. They are asked for detailed invoices and customer information, a breach of their client's privacy. This friction discourages the use of cash altogether, pushing all transactions onto digital platforms where they can be monitored, tracked, and of course taxed and feed to the maximum extent. Small businesses, the backbone of many local economies, are being squeezed from all sides, caught in the crossfire of a larger agenda that prioritizes surveillance and bank profits over the freedom and viability of independent enterprise. The most profound impact of these cash restrictions is not merely financial or logistical. It is the fundamental erosion of personal freedom and individual autonomy. Money is more than just a medium of exchange, it's a tool that enables choice and independence. The ability to hold and use physical cash provides a crucial layer of privacy and allows individuals to operate outside of a system of total surveillance. When you pay for a book, a meal, or a bus ticket with cash, that transaction is private. It is between you and the merchant. This freedom from constant monitoring is a cornerstone of a free society, allowing for private association, dissent, and the simple right to not have every single action recorded and analyzed. The move to limit and eliminate cash systematically dismantles this freedom. It creates a world where every financial act is logged, creating a permanent and detailed record of your life for banks and governments to see. This opens the door to a level of social control previously impossible. Imagine your bank declining a transaction because it deems your purchase non-essential during a declared climate emergency, or freezing your funds because you attended a protest that the authorities disapproved of. Without the alternative of physical cash, you have no recourse. You are entirely dependent on the permission of a centralized authority to participate in the economy. Your financial sovereignty is completely extinguished. This shift disproportionately harms the most vulnerable members of society. The unbanked, the poor, the elderly, and recent immigrants often rely on cash as their primary means of survival. They may lack the documentation, technical literacy, or trust required to navigate the digital banking system. A cashless society risks excluding them entirely, creating a two-tiered world where access to basic economic life is a privilege, not a right. The promise of financial inclusion through digital means often ignores the reality that for many, cash is the most inclusive and accessible financial tool ever created. Removing it is an act of exclusion, not progress. Ultimately, the real-world impact is the creation of a digital enclosure. By making cash difficult to access and use, the system herds everyone into a digital pen where their behavior can be monitored, influenced, and controlled. It changes the relationship between the citizen and the state, tilting the balance of power dramatically in favor of the authorities. The right to transact privately, to hold tangible wealth outside the banking system, and to maintain a degree of financial autonomy is being systematically taken away. The fight for cash is not about clinging to an outdated technology. It is about defending the last bastion of financial privacy and freedom in an increasingly digital world. A profound risk of a cashless society is the annihilation of financial privacy. Every transaction would be recorded in a permanent digital ledger. This data would be accessible to banks, government agencies, and corporations. Your financial history would become an open book, creating a portrait of your life. This surveillance transforms money into a public record. Spending patterns become a commodity, used to build psychological profiles. A government could use this data to monitor dissidents or activists. Financial privacy protects individuals from the arbitrary exercise of power. This digital trail can be misinterpreted or used against you later. In a cashless world, you become a node in a network, perpetually tracked. Beyond passive surveillance, a cashless society creates unprecedented control. When all money is digital and centrally managed, authorities can exert direct influence over your finances. The ability to freeze or seize assets becomes trivial. As seen with the Canadian trucker protests, banks can instantly cut off individuals from their funds. Without cash, there is no escape from financial censorship. Central bank digital currencies, or CBDCs, are programmable money. Governments could issue CBDCs with embedded rules like expiring stimulus funds to force spending. Purchases could be blocked at the point of sale. Every transaction would be subject to approval by a central authority. This could integrate with social scoring, tying fund access to your behavior. The fear of financial punishment would compel citizens to align with the state, eroding dissent. Digital numbers would represent a conditional privilege, revocable at any time. This shifts power from the individual to the state. The removal of cash is the construction of a digital cage. A cashless society presents dystopian risks, but also carries immediate dangers related to exclusion and systemic fragility. A digital-only system inherently excludes significant portions of the population, like the elderly and the unbanked. Furthermore, a society reliant on digital infrastructure is incredibly vulnerable to systemic failure. Power outages, internet disruptions, or cyber attacks could bring the entire economy to a halt. Physical cash is a robust technology that works offline, providing a crucial fallback. In a fully cashless CBDC system, your identity is tied to a single state-managed digital wallet. If you are deplatformed, you would have no alternative and be completely shut out of the economy. The drive towards a cashless society threatens to create a more brittle and less inclusive world. The potential for widespread disruption and individual hardship is dangerously high. Given the trajectory towards a more restrictive financial system, sitting idly by is not an option. The crucial step is financial diversification. Relying on a single bank is like putting all your eggs in one basket. Open accounts with multiple financial institutions. Diversify the form your money takes. Hold tangible, offline wealth. Keep physical cash on hand, stored securely. This is your emergency fund, your financial lifeboat. For centuries, precious metals like gold and silver have served as a store of value. Build resilient personal networks. Knowledge is your first line of defense. Build relationships with local producers and neighbors. A strong community is a form of wealth in itself. As we stand at this critical juncture, the world of money is undergoing a profound transformation. The convenience of tap-to-pay comes at a steep price, the erosion of our privacy and the loss of our autonomy. This system serves the interests of banks seeking control and governments seeking total surveillance. The path we are on leads to a digital enclosure where financial freedom becomes a relic of the past. The elimination of cash is the linchpin of this project. Cash is the final barrier protecting the individual from absolute dependence. They are dismantling a cornerstone of personal liberty. We must resist the normalization of financial surveillance and refuse to trade our freedom for convenience. We must vocally oppose central bank digital currencies and advocate for policies that protect financial privacy. Vigilance is our most powerful tool of resistance. The battle for the future of money is a battle for the future of freedom itself.